We're all about stocks this week. Strong trades for the markets, but Friday sees some profit booking. We'll tell you what your strategy should be. We'll give you a roundup of all the hits and misses of the Q1 earnings season so far. And our investment advisor, Chokkalingam, has made a profit of 55% on his portfolio. We'll tell you how he did it. Welcome to All About Stocks. You're watching ET Now. I'm Faye D'Souza. This is a show for long-term retail investors. Thank you so much for tuning in. Now, over the next half hour, we're going to take you through the earnings season, what we've seen happen in the market, and what your strategy should be when it comes to your stocks. If you have any question about your stocks, write to us. Our email ID is at the bottom of your screen. You can also reach us on our Facebook page, and you can reach me on Twitter. Let me bring in my colleague Ajay, who gives us an update on all of the action on the last street this week. Ajay, take us through what happened this week while we were all in the office.
Well, Faye, it was a pretty interesting and constructive week for Indian equities this time round. We've gained about 2% on the benchmark indices. The only worry sign is that the broader markets continue to witness correction or profit taking. Also, a highlight of the week is that 7,800 on the Nifty was taken out on a closing basis, and traders believe, the charters especially, that we may try to build on from here on as far as Nifty is concerned. But it was not one straight direction upwards. The markets were extremely volatile, mainly because of the geopolitical worries at the horizon. But the good thing is that on every decline or any bout of weakness, there was buying support coming in from the fund side, which continued to pour in money as far as Indian equities are concerned. In terms of performance, it was the defenses which were really leading from the front this week. So healthcare, IT, to a certain degree because of positive data coming in out of China. Even metals were gaining this particular week. But overall, it was the defensive nature of the market which was supporting elevated levels. Well, it was also a very earnings heavy week, and we saw a mixed kind of trends coming in this particular week. There were equal number of hits and misses, but at least the people looking at the market constructively say that there were no big nasty surprises which may break the sentiment or back of the market, and hence coming weeks also they say that fund flows, liquidity and direction of the way earning actually trends will actually be the big direction giver to the market from here on.
All right, Ajay, thank you so much for that update. Joining us in the studio today, Chokkalingam, the founder of Economics Research and Advisory. CHOKKA'S, thank you so much for coming in. Now, we've seen 1 week of earnings season. We've seen a lot of the big numbers come out. What is your reading so far, especially of the banking and the IT sectors? Because we saw, when the new government came in, a lot of the momentum stocks picked up, a lot of infrastructure, a lot of cap goods, things like that turned around quite drastically. But given the earnings season and what it reads for us in terms of pure fundamentals of how these companies are functioning, what are you impressed with? What are you not impressed with?
Certainly, I am impressed with the way the political stability has come, the market has taken off. But certainly, it's very sad to know that a lot of retail investors lost a lot of money. Because in any economy, the things take at least 2 to 3 quarters to improve. So particularly the momentum stocks, in infra and capital goods. So they, many stocks have doubled. Some of them even gone up by 300 to 400% between March and now. And definitely the June quarterly result, you are not going to see even 30% improvement in the earnings over March quarter. So this is a very unfortunate, bitter truth about, the responses of the retail investors. As far as these two sectors are concerned, the private banks are still doing very well. IT would continue to do well. In fact, I have been saying that this year, IT stock would, outperform the benchmark indices. Because let us not forget the fact that, India has to repay more than $175 billion of external debt before March 31st, 2015. So there's going to be a tremendous pressure once again on the rupee exchange rate. So it would do well, and as I said, private banks would do well. Public sector banks, again, they are going to take at least another, 1 or 2 quarters to improve. Even today we saw, quite, not, favorable results from many POC banks. Because it's going to take time for them to, recover the money. But medium to long term, I'm optimistic even on the POC banks. Because particularly the one policy initiative, that is the infra loan by the banks with some concession, that's going to be a big game changer. But one has to wait and see, entire results before taking a call aggressively on the POC banks.
Tell me about RIL. From what you heard in the RIL results, and everybody was so gung-ho about it, is that something you were already expecting? And what do you expect from the company going forward?
See, the results are, aligned with the analyst expectation, because these days analysts are able to predict the results with a lot of precision. So, but definitely, for me, more than the quarterly results, what is important for Reliance Industries is the gas price policy. But again, I am not too much concerned. If you look at the June quarterly results also, from oil and gas segment standalone, they made about less than 400 crore. From interest income, that is net interest income was more than 1,000 crore. So today, the oil and gas segment is very insignificant. So going forward, what I expect is that only two things. Either the government would come out with a very commercially viable policy for gas, which would be favorable to Reliance Industry. If they fail, then the company would go for a shale gas. Anyhow, they got a lot of cash. So this is the only issue which I would look out, and I am optimistic on the stock in any case. Either they have to get better price here, or they will go for shale gas in the US. They will invest a lot of money there. So either way, they are going to do well next 1 to 2 years.
All right. See, there seems to be a lot of talk about the fact that while we saw profit booking on Friday, this is a long-term rally. And a lot of investors have gotten back into the market now after staying away for a couple of years. Now, how much attention should they pay to the fact that there are these momentum sectors that are moving really quickly? Real estate, for example, did, moved a lot, and then we saw some profit booking as well. We saw I think the index was down about 1.2%. So tell me what we should do as retail investors at this point. Should we continue to hold largely IT, private banks, those sort of stocks in our portfolio? Should we add momentum sectors to our portfolios? Should we make changes at this point?
Certainly, they should come out of the momentum stocks, infra, capital goods, except 1 or 2 where the fundamental comfort is there. But in 9 out of 10, there is no fundamental comfort. As I said, they got ahead of the fundamental, the stock prices. I don't want to name the company. There is a company which is 3,300 crore revenue, 3,200 crore inventory and sundry debtor, and stock moved up more than 300%.
You should name the company.
So, what I'm trying to say is that, people should not move, they behave in the market based on the news flow. They should look at the management quality and the balance sheet comfort, and also the prospects for the fundamentals to improve, earnings to improve. So clearly what I would say that even now it is not too late to book profits in the capital goods and in infra, and go after quality stocks in FMCG, IT and the private banks and select POC banks. The second broad strategy should be to look for good quality mid-cap stocks, because today the whole market is at a premium, above historical average, and most of the large cap stocks are not attractive right now if you look at. So, like every bull market, if you recall even 2007-8, a lot of unpopular names in the mid-cap became popular. In fact, they become large cap and darling of FIIs. So, that would happen once again in the next 1 to 3 years. So
I want to quickly interrupt you here. You said sell a couple of the infrastructure stocks. Would L&T be one of those stocks that you think we should be getting out of at this point and moving into mid-caps?
See, it is in the momentum sector, but it's not a momentum stock.
Okay.
There is a quality in it. So if somebody wants to wait for 1 to 3 years, one should hold it. But tactically, if you want to make more money, I would say you sell L&T and move on to somewhere IT stock or quality mid-cap stock. But if you are willing to wait for 2 to 3 years, one should hold on to it.
Now, for those of you who are regular viewers, Chokka designed a portfolio for us on the 8th of August 2013. That portfolio is currently at an overall gain of 55%. I'm going to give you a list of stocks now. It's outperformed the Nifty about 15%, and these are the stocks that we have in the portfolio. There's ITC, Infosys, RIL, RCOM, Neyveli Lignite, Jammu and Kashmir Bank, Emphasis, Karur Vaishya Bank, Barmer Lorry, Moil, Tilak Nagar Industries, JK Tyres and Sensor Technologies. So tell me this, I want to ask you this very quickly. Now, not all of the stocks have been doing very well. If you're talking about RIL and Infosys, you did mention earlier on the show that we should be at this point holding on to our IT sector. You said you were positive about RIL. What is your feeling about RCOM at this point?
See, RCOM I added purely on tactical ground. When last time we included also, I said that fundamentally there is no comfort. Why I added is that, I firmly believe that, I may be wrong, but I believe that there is a possibility of consolidation happening in the telecom space and RCOM joining in it. If it doesn't happen also, RCOM is, generating a lot of cash by unlocking value from assets, real estate and, the global businesses. So, if they continue to unlock money and then the debt would come down, the fundamentals would improve. But according to me, Reliance Jio, there is a possibility of some alliance with the RCOM, because it took more than 12 years for Bharti Airtel to get, about 25% market share. Right. For Reliance Jio, which is investing more than 70,000 crore in the telecom space, it is very difficult for them to get a 25% market share in next 2 to 3 years or 5 years. So therefore, I believe, logically speaking, there is a possibility of alliance between these two. If that happens, it will be a win-win situation for RIL as well as for RCOM.
What about the other stocks that are in the negative right now? I'm going to take you through which stocks we're talking about. Tilak Industries is down about 9%. Neyveli Lignite is down 6.2%. And of course, we just talked about RCOM that's down 3.7%. What do you want to do with Tilak Industries? You've had it for a while now.
Yeah, I would book losses. Basically, two things happen after we included. One, the government has allowed a mixing of ethanol with, petrol, and which is negative for the liquor companies because, they are the major consumers of industrial alcohol.
Yes.
So they have to compete with the oil companies now. Two, even the drought conditions in many states, because for alcohol producers, the grain is a very key input. So there is a possibility of input price jumping. So I will take this cut losses and move on to MRF. And I firmly believe that there's a lot of upside in next 1 to 2 years in MRF. And because the rubber price continue to remain low, a 3-year low at 139 rupee per kg.
I remember you said the same thing to us when you picked up JK Tires.
Yeah.
Which in all fairness, it's up 230% since you invested in it. But what is your comfort with having 2 tire stocks in a 10-stock portfolio?
Definitely. I mean, that is why I've given only 5% to MRF. Why I have given 2 stock is that I have strong conviction in both of them. Now, if you look at the JK Tire, it has posted about 60 rupee EPS for FY14 after writing off around 53 crore towards exchange loss. And after that also, again, in this quarter, the rubber price have crashed further. And globally, the demand for rubber is very weak. And secondly, the tire companies have done well despite stagnation in the auto sector. But now auto sales also improved. So therefore, I believe that both of them will do very well going forward.
Here's a quick recap of Chokkalingam's portfolio. ITC, Infosys, RIL, RCOM, Neyveli Lignite, J&K Bank, Emphasis, Karur Vaishya Bank, Bama Lorry, Moil, MRF, JK Tire and Sensor Technologies. If you have any questions about that portfolio, you can write to us. Our email ID is at the bottom of your screen. Now, we're going to go into a break, but I'll leave you with a list of stocks that announced their numbers this week. Which of them missed and which of them hit their target? Take a look. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. G. Chokkalingam is with us as well, helping us figure out our long-term strategy when it comes to investing in stocks. Now, Chokka, I want to look at your report card. You had recommended Sasklen Communication Technology on April 17th, 2014, when it was trading at 192 with a target of 250. That stock is currently at 310 rupees. So it's crossed that target. So for those of our viewers who bought it at the time that you recommended it, now that it's crossed the target, should we be now taking money off the table? Yes,
certainly. I mean, valuations are stretched. It is, almost close to 20 PE. So I would say sell and buy, stock like a Gensar, which is still available at around 8.5 times 1 year forward earning.
All right. Also, now that you know that Chokka's recommendations work, he's brought us one more recommendation this week, and this is Claris Life Sciences. It ended the week at 160 rupees. Now, this is a manufacturer of sterile injectables, and we know the U.S. health regulator has found its manufacturing facility acceptable after a recent inspection. Chokka, tell us of all the options available to us within the pharma industry right now, why this particular stock?
Yeah, I find some comfort in terms of valuation. Most of the pharma stocks are close to 52-week peak, or historical peak, whereas this stock has corrected from, 52-week high of 250 to around 160 now. And secondly, they have done a buyback of around 92 lakh shares, and that is also EPS accretive, And third, recently they have hived off injectable business into a subsidiary. And today, a lot of foreign investors are very, anxious about acquiring injectable business in the country. We have seen the mad valuation given. So there is a remote possibility of this company even selling off injectable business to some foreign company and unlock a lot of money. Because otherwise, I don't know why they have hived off into a separate subsidiary. And these are the reasons for me to, go bullish on the stock.
What is your target on this stock right now?
I think considerably at least 240 it should achieve.
Tell me this, with this level that it's at 160, this is where it closed for the week. Should we be buying it on Monday morning, or do you think we should spread this buy over the next couple of weeks, look for dips?
What I suggest is that, sometimes our show has a lot of influence on the stock price. So if it opens, 5-10%, don't buy. I mean, not only this stock, any stock. I mean, don't listen to people like us and, start buying whatever is the price. 1 or 2% upside also you can buy. Even up to 165, 166, one can buy. But otherwise, always wait for the opportunity from the market to buy.
Okay, always wait for that opportunity. That's the recommendation for this week. It's Claris Life Sciences. If you have any questions about it, you can feel free to write to us. Email ID is at the bottom of your screen. Let's take a few questions that came in this week. Rajinikanth has written in. He has 50 shares of Bharti Airtel, which he bought at 377, and 36 shares of Bank of India, which he bought at 376. He wants to know, should he hold on to both of those stocks? What's your call?
Yeah, certainly should hold both. I still believe that there is scope for the defensives like a telecom company to do well, and Bharti Airtel should hold. Similarly, Bank of India, I mean, it's available at a very attractive discount to the book value on 1 year forward earning. As I said, the POC banks also will start doing well, thanks to the government initiatives on infra loan, and also the possible recovery in the economy. So therefore, should hold both stocks.
All right, hold both of those stocks. Let's take another question. Gomati Balaji has written in. He has 150 shares of Cairn, which he bought at 326 rupees. He also has Punjab National Bank, which he bought at 616. Now, he wants to know if you should hold on to both of those stocks. Let's first talk about Cairn. I'm going to put that on your screen right now. Rough week for that stock, also because Cairn finally told the stock market and all of its investors that it had lent $1.2 billion to the Vedanta Group. For viewers or investors who were watching that stock, that came as terrible news. They didn't react very well. The street didn't take it very well. What's your call on that stock? What's your analysis of Cairn right now?
See, I also recommended, in fact, I bought the stock.
You were very bullish on this stock for a very long time.
So I am also impacted very badly. In the sense, personally, I don't own the stock. It's for my clients. The point, it's a big shock. In fact, perhaps I was the first analyst to track Sterlite Industries in the 90s. I know the way the Vedanta Group has created wealth, enormous wealth for the investors. So for people who have seen their wealth creating experience, it's a big shock. Now, the management claims that, it's a win-win situation because, Cairn is going to get 50% more interest by lending to Vedanta Group. For me, it's a lose-lose situation. First, why should Vedanta pay 50% more interest? They can always borrow from outside. Now, why should they destroy the market cap of Cairn India? So it is not a win-win situation. It's a lose-lose situation. I am sure, the management which has done so well for the retail investors in the country in the last 1.5 decades would reverse their policy and, return the money of Cairn India and reward the investors in terms of, buyback or, good dividend.
That's all just as well. But what should I do as an investor right now if I'm holding that stock?
You hold it. I mean, because, actually it's not a fraud on the company. There could be a governance issue.
Ethical gray area. Though.
Yeah. So it's not a scam or it's not a given free. So everybody is watching. I mean, there are institutional investors. Everybody is watching. So it's not a fraud or a big loss for the company. It's only a question of whether you like it or not. So therefore, one should hold on it because it's still quoting at a 7p on 1 year forward earning.
All right. So if you have questions about the Cairn India stock, you can write to us or you can tweet out those questions. My Twitter handle is on your screen right now. Let's also talk about Punjab National Bank. We saw the numbers come out. Net profit up about 10%. Asset quality was still a concern as far as the street was. What's your call on PNB? Hold on to it.
I would sell it because it is quoting at 1.4 times adjusted book value. Today, most of the POC banks are still quoting around 1 time book value. So, therefore, I would sell. And to make a fast money, I believe that the money can be used in MRF. As I said, it's a time due for the management to give bonus and split because stock price is around 23,000 rupees.
Yes.
So, it is unaffordable for many. So, I hope that management will give, either split or bonus, which can take the share price easily to anywhere from, 28,000 to 30,000 in the near future itself.
Time for a very quick break. Stay tuned. When we come back, we will discuss stocks like Tata Steel and Yes Bank. Don't go anywhere. Welcome back. You're watching All About Stocks and ET now. Thank you for staying with us. Chokkalingam is with us as well, helping us make money over the long term. Now remember, every week we pick one lucky viewer and we take a look at your entire portfolio with all of your stocks and tell you what you should be holding on to and what you should be selling. This week, our lucky viewer is Hema. And it's always nice to hear from a woman investor. Now, Hema sent us her list of stocks. Before we go into the entire list, Chokka, I want to bring out the fact that she has 1,000 shares of Tata Coffee. She has 500 shares of Tata Global Beverages and 50 shares of Tata Steel. Let's set Tata Steel aside. But that is a huge chunk to be putting in the Tata Group and in coffee and tea. So do you think she's overexposed? Do you want to reduce that amount a little bit?
Certainly, you are right. I mean, if this is the only portfolio she has to really do introspection, because 92% of the portfolio only in 2 companies, and one of those 2 companies is a subsidiary of other company. So literally she is playing on a single company to the extent of 92% of the portfolio.
She must really like Starbucks.
But she should love her money first.
So no, for her, for Hema, and for anybody else who's watching who maybe find themselves in the same position, how do you do that? How do you start taking out the money from the portfolio, moving into other stocks? How do we decide how to execute that decision?
You should have a brave heart, and if it is a loss also, you book it. Always a disciplined portfolio strategy mitigates the risk. Okay. So your aim should be to mitigate the risk. The return is a byproduct in the equity market. So they should book, losses to the extent of, 2/3 of the stock she holds in Tata Coffee.
All right. So book losses in Tata Coffee. Tata Steel, which she has bought at 354 rupees. What would you like her to do with that stock?
I would suggest exit and move on to Wipro. Tata Steel, great company, but it has played out a lot. And steel capacity has gone up by more than 33% last 3-4 years. And again, it's going to go up another 50-60% in the next 3-5 years. So therefore, I would suggest sell on Tata Steel.
She also has 100 shares of Yes Bank, which she bought at 259 rupees. Now, Yes Bank missed the numbers and it got quite a beating there from the street. What would you recommend she does with that stock?
I would still suggest hold. It's my favorite stock. Because look at the net NPA, 0.07%. So much of pessimism in the month of August last year. But despite that, the bank has been doing very well on the quality of asset front. And the growth, in this environment, even 9-10% profit growth is something commendable. I want to ridicule this poor performance. So I would suggest hold.
All right, hold on to that stock at 500 shares of Cox & Kings, which she bought at 124 rupees. That stock has done well for her. Given what she has in the rest of her portfolio, is it the best complement?
Yes, fortunately for her. But again, when you look at the balance sheet, it has got a debt of 5,000 crore on a revenue base of 2,300 crore. I think, since she is making more than 100% profit, she should exit. Moreover, this company has done losses in March quarter, and balance sheet comfort is not there. So she should book profit and move on to defensive stock like Claris Life Science.
That was going to be my next question. If she takes money out of Tata Coffee right now and out of Cox & Kings, would you like her to move all of that money into Claris Life Sciences?
No,
Is there anything else you'd like her to recommend?
She should add at least 3-4 stocks. Something from the IT stable also she should add. She can consider stock like Wipro or Gensar from IT. And from the banks, she can add something like Karur Vysya Bank because it to participate in the rally. I'm very optimistic that that bank will do very well in next 2 years. So like this 2-3 stocks she should add to her portfolio.
All right, Hema, we hope that helps. Remember, you can get back in touch with us if you have any more questions. Keep sending in your stock queries to our Facebook page. Also, you can reach me on Twitter. Chokka, thank you so much for spending time with us this weekend. Thank you for watching. Stay with ET now.